Hey traders, Nick here looking at Verizon. Actually, this is not Verizon. This is the Qs. Okay, here's Verizon. Today, pretty active stock. I shared a note earlier today with friends of mine about the upside potential. That was before this giant candle. I literally wrote the note, and then headlines broke out with regards to Sprint and T-Mobile, and then the stock went crazy. So basically the point of the note was that Verizon is trading with support below, long-term support below, and a resistance level above, but the resistance level would be an opportunity. And I believe this was the line I was looking at, and here we are well above it. But the point of it was, I said, okay, it's an opportunity, and if the bulls can push past it, they could, erase the giant red candle from March 28th, which was this one. So here's what happened today. All of this came through in a matter of seconds. Because just recently, in a matter of seconds, because the headline came out just after I wrote the note, and then boom, the stock went crazy. I think Sprint went up 15-16% because it's being acquired, and the note was that the Department of Justice was going to okay it. And here's the candle I was talking about, and it almost completely filled. It wasn't a gap, so to speak. Maybe it was on lower time frames, but just the level perspective. And then just a few minutes ago, somebody else came out and said, no, the Department just not going to do it. They're leaning no. So now it's giving back. It's still a little green, but not a lot. So what do I do here? Nothing really, because this was an opportunity and it kind of played out in minutes. However, this is a stock that pays, I'm going to say without looking, dividend of 4%, maybe 4.2%. I'm going to go to a monthly chart. Maybe that'll give it. Okay, so let's go back to a weekly. That's just too noisy. All right, so the point of the note was that there is support below, and this red box is kind of like the support level below. So it would need really bad market-wide correction in order for it to break, or a really bad black swan event for Verizon itself. And it seems like management doesn't make such big mess ups. So if I wanted to go trade Verizon for the long term right now, I would do it positive, meaning I would go bullish rather than not, because most of the people that hold it for a long term have good conviction because they're strong hands. They're not weak from the standpoint they have value. The stock is not expensive from a typical fundamental, like a PE ratio. I'm going to say it's in the mid-teens. We'll verify that in a second. Okay, PE 15, there we go. And if we want more information, 1.8 times sales, and then it pays a dividend of 4%. So if they see a couple of red ticks, they're not going to panic out of it. So long term, obviously, it plays out, but what I showed you here, this is a monthly chart, and long term maybe not so much because it's been here before. So there is a way to protect your investment. If I'm holding stock and I'm worried a little bit for a period of time, I can buy puts, which kind of gets expensive, but I can do it for free by selling calls against it. So what do I do with Verizon here? Fundamentally, it's still fine. It's going to trade with the market. So if your thesis on the whole market is that this dizzy will pass on the China thing, which is what my thesis is, then Verizon is a buy on the dip. There's no dip today, and the stock market is falling. So what do I do now? Now becomes that what happens with this candle, you might be able to break it down with further smaller increments, but really it's this candle versus whatever else is possible. So what I would do is I would set alerts at what level I like. Maybe this is the first level I like, 59.5 or more. Why this one? Because this was right here, that last point of failure. Pretty close to this one, so I like it. Also was here, see that little candle? Whoa, check out this reversal there. So definitely this would be the first place I'd put an alert, saying, hey, it's rising above it. Maybe you start looking at it. The other level would be right here. And maybe right here. So you've got three tops. You draw a line. You say whenever they broke and close above that line, maybe they overshoot higher. Kind of looks like a cup and handle. I don't care what you call it. It's a big dip that comes back and fails. That gets better treatment than this big dip. It's a smaller dip. And if they come back to it again and break out of it, or if they don't come back, just break out of it from here, that's good news for the bulls. So that's the positive side. So how do I protect stock I already own in it? I buy puts for a period of time where I'm worried. They cost money, but it's like insurance. You cover your assets, your car, your health, your house. and you don't cry about it. I should have canceled my insurance last month because I didn't wreck the car. You don't say that. But still, you can do it for free. How do I do that? You buy a put and you own the asset. You sell a covered call, never naked call. You collect money and you buy the put with the money. So for a period of time, your upside is limited and your downside is completely protected. So that would be the way I would treat Verizon right now. Fundamentally, for me, I like the stock. If I like collecting dividends, that would be one I'd put in my box. I'd like it better if it falls closer to here, but I'm not sure we're going to get that opportunity. Right now, I'm looking at the market is open, and I'm looking at fears trying to rise with no headline, but I haven't seen yet bonds fall with as aggressively. In fact, bonds are red. If I looked at the ZB, let me show you a TLT. Maybe that'll be it. So here's the TLT, which represents the 20+ year ETF on bonds, so to speak. It's a rising channel, but has failed here, and so now you have two situations. If this happens, the stock market is going to correct a little bit more. If this happens, we get a bounce in the stock market here. That's my opinion, because usually bonds move opposite stocks. Boy, we're transitioning here to a different topic, but here's the opposite looks of it. This is quote rates, yields. This is the 10-year yield. Usually they look at the 2-year, 10-year. They say the 10s to 2s. So if the short-term rates become higher than the long-term rates, that's bad for the economy. So this kind of represents the longer-term rates. I bet this bounces versus finds really lower lows. And if that's the case, then the TLT drop is the more likely scenario, which means the stock rallies, which means Verizon rallies. Capiche? Probably not. Anyway, Nick signing out.